this was going to happen. I've been saying for years and years that the Fed would go back to quantitative easing. I'm surprised they were able to hold off as long as they did. Now, the reason they probably didn't want to acknowledge that this is quantitative easing is because they don't want the markets to be worried. Actions speak louder than words. And the Fed's actions are that inflation is not going to 2%. In fact, it's going to be much higher than 3%. In fact, I still believe that silver is going to hit $100 next year. And gold, at least 5,000, probably 6,000, maybe more, depending on what happens in the foreign exchange markets. If we get a dollar crisis, if we get a U.S. Treasury crisis, I mean, we're going to get those crises eventually. Now, a lot of people didn't think that this was going to happen. I've been saying for years and years that the Fed would go back to quantitative easing. I'm surprised they were able to hold off as long as they did. Now, the reason they probably didn't want to acknowledge that this is quantitative easing is because they don't want the markets to be worried that the Fed is now having to do this. So they're trying to claim that, well, they're just trying to manage their reserves and they want to make sure that their reserves are ample. I mean, the balance sheet is $6.5 trillion right now. Isn't that ample enough? But they want to have more treasuries on the balance sheet, and so they're going to buy them. That is quantitative easing. And also, it won't be long before the Federal Reserve expands this program and lengthens the duration. So sure, right now they're buying short-term treasuries. It's only a matter of time, and probably not much time, before they start buying longer-term maturities. Now, they're probably never going to admit that what they're doing is quantitative easing, but clearly that's what they're doing. And the reason they're doing it is because they have no choice, because they're trying to suppress interest rates. And to do that, they have to expand the balance sheet. They have to buy more treasuries to get the yields lower. Now, in reaction to the announcement, and this is another forecast that I've been making, the yield on longer-term treasuries went up. In fact, the 10-year treasury yield closed at 4.19, and the 30-year is up to 4.85. So yields rose on the week, despite the fact that the Fed reduced short-term rates by another 25 basis points. They're down at 3.5 to 3 3/4 on the Fed funds. But despite that reduction, longer yields went up. That also means that mortgage rates ticked up, the opposite of what everybody is hoping for. The markets, the Trump administration, they're all looking for the Fed to help bring down long-term rates. But long-term rates are rising. And in fact, because this new stealth QE is targeting short-term rates, they're not buying these long-term bonds. So the long-term bonds are falling and yields are rising. And I think yields are going to continue to rise. And I think it's that backup in long-term yields that is going to be the catalyst for the Federal Reserve to expand the quantitative easing program to include these longer-term maturities, because they're going to want to put downward pressure on long-term interest rates. But what they've just done is already putting upward pressure on those rates, because they are creating more inflation. They are printing more money to buy short-term U.S. government debt. That is inflationary, and that is going to weaken the dollar. And in fact,
what Peter Schiff is saying is terrifying. The Fed is printing money to buy debt, which is a direct tax on your savings through inflation. To protect your wealth from this hidden tax, make sure to hit that subscribe button right now. Now listen to why neither political party can save you.
Yesterday, the dollar dropped and it hit a 2-month low. It was kind of stable today, but to me, it looks like the dollar has now finished this correction and is resuming its downtrend. I think that is going to accelerate. So you've got the dollar falling, you've got bonds falling, you've got gold and silver rising. This is exactly what you would expect in an inflationary environment. And of course, inflation is the biggest problem right now. When you hear the Democrats talking about affordability, right, as if they had nothing to do with how expensive everything is. I mean, they were very key in pursuing policies that created all this inflation, that led to the Fed monetizing all this debt. So they don't have clean hands when they blame Trump for the affordability crisis. But of course, neither does Trump, because his fingerprints are all over it too. He helped make things more unaffordable during his first term. And the policies that he is pursuing during his current term are also inflationary. But given the fact that inflation is already 3%, right? The way the government measures it, it's a lot higher than that if we honestly measured it. But given the fact that inflation is already 3%, and Powell said at the press conference that the Fed is still committed to bringing inflation down to 2% and that the current rate is too high. In fact, if their target is 2%, they've been above it for 5 years. So clearly it ain't working. They keep saying they want 2%, but we're at 3% and rising. But if the Fed is really serious about bringing inflation from 3 to 2, why did they cut rates again? They just cut rates 3 times in a row, but inflation is moving higher. Plus, if the Fed were really serious about bringing inflation down, why are they doing quantitative easing? And even if they don't call it quantitative easing, why are they expanding their balance sheet? Because that is inflationary. The reason they're doing all these things is because they really have no intention of bringing inflation down to 2%. In fact, I think they realize that inflation is probably never going back down to 2%. It's just that they don't want to admit that. But, you can't look at what they say. You have to look at what they do. Actions speak louder than words. And the Fed's actions are that inflation is not going to 2%. In fact, it's going to be much higher than 3%. But the Fed really doesn't care because it's too concerned about the economy. And it's not just employment, because the unemployment rate, the way the government measures it, is still relatively low. I think the Federal Reserve sees a much bigger problem in the housing market, where housing prices might collapse, in the stock market, where stock prices might collapse, and also just in the enormous cost that the U.S. government has to pay to service a $39 trillion national debt. I think the Federal Reserve realizes that rates need to come down despite the fact that inflation is going up.
This is the ugly truth. The Fed knows they can't get inflation back to 2%. Their real priority is keeping the stock market alive and servicing a $39 trillion national debt. High inflation is not a bug, it's the feature.
To maintain the ability of the U.S. government to service its debts and to keep the air from coming out of all this asset bubbles that it inflated in real estate, in stocks, in bonds. Now, I don't think the Fed is going to succeed in preventing these bubbles from deflating, but that doesn't mean it's not going to try. And when the rate cuts are not sufficient, and when this new round of quantitative easing is not big enough, all of this is going to be expanded. And that's why these bull market in gold and silver is going to continue. And, I have been really pounding the table ever since I started, I took over the mic on the Schiff Gold Friday market wrap, that everybody load up on precious metals. In fact, I do these on a Friday, and, the markets don't really resume trading until Sunday night, but it's 24/7 at Schiff Gold. You could go to our website and buy gold and silver. You could buy it on Friday night, buy it Saturday morning, Saturday night, Sunday morning. Generally, the prices are pretty much where they closed. And you want to do that. You don't want to wait for Monday, because I think, again, we're going to be very strong on the open. In fact, I expect silver to be back up at the high from today, maybe by Monday. And gold, before gold sold off, gold was up about $70 at the highs today. And it still closed up over $20, even though silver was down, $1.60, right? Gold held strong on the day, even with this profit taking. But gold got less than $30 away from hitting a new all-time record high. Now, if you recall, on the last Schiff Gold market wrap that I recorded, I specifically said that silver was going to hit a new record high before gold. That prediction came true. I also said that gold and silver stocks, the GDX and the GDXJ, which were way off their highs, I said that they were going to hit new record highs or new highs for the year before gold hit a new high. And that prediction came true this week. We had a big move up in the GDX and the GDXJ, both indexes hitting new highs. This is another great sign because in the prior leg of the gold bull market, gold was going up, but you weren't seeing confirmation in silver. You weren't seeing confirmation in the mining stocks. Now we're seeing confirmation by both. Instead of gold leading silver and the mining stocks, it's following. Silver has now taken over the baton from gold. Silver is leading the charge higher. Yes, it's doing it with more volatility, but it is leading.
This is the ultimate confirmation signal. It's not just the metals rising anymore. The mining stocks are finally breaking out. When miners lead the metal, it historically signals the start of a massive, sustainable bull run.
And the gold mining stocks are now leading the metal. You see, in the earlier stages, a lot of people were looking at the gold rally with a lot of skepticism because they weren't seeing the confirmation in the silver market, and they weren't seeing the confirmation in the mining stocks because mining stocks investors didn't have confidence in the gold rally. They expected gold to collapse, and so they didn't want to pay up for earnings that may never materialize. And so there was a lot of hesitancy to buy the gold mining stocks. But now that people are buying those stocks, it's because they're starting to realize that these high gold prices are here to stay, that gold's not going to come crashing down. And so these high earnings are going to continue. And in fact, at some point, people are going to recognize that not only are high gold prices here to stay, but they're going to get even higher, that the market's going to keep rising, which means earnings are going to keep rising. And so now stock investors want to get ahead of that. So now we have a more traditional bull market where the stocks are leading the metal, anticipating the increase because stocks are forward-looking, right? Stock investors are trying to predict the future when they buy stocks because they're making a bet on what those earnings are going to be. And when you have a nice bull market where investors expect the bull market to continue, you would expect them to pay up for the gold and silver stocks. That's what they're doing. Now, those stocks are still cheap, but at least they're leading the way. And I've always said that in a real gold bull market, silver outperforms. And up until this year, it was underperforming. That's why earlier in the year, you could buy 100 ounces of silver for 1 ounce of gold. Now, I didn't check the ratio, but I think it's around maybe 67 or something. It's below 70 to 1. Still cheap. Silver is still cheap, but it's not nearly as cheap as it was. And remember, when silver got through 50, what was I saying on this market wrap? That was it. That now we have the double top is now support. 50 is the floor. And yes, I said we could go a little bit below it, and we did. We traded a little bit below it, but all of that was buying opportunity. And now we shot up, and now it's likely that silver's not going back to 50 again. It's not impossible, but it's very improbable at this point. In fact, I still believe that silver is going to hit $100 next year.
Mark this timestamp. Peter Schiff is calling for $100 silver and $5,000 gold by next year. If you are sitting on the sidelines waiting for a dip, you might be making a costly mistake. The window to buy cheap is closing fast.
And gold, at least 5,000, probably 6,000, maybe more, depending on what happens in the foreign exchange markets. If we get a dollar crisis, if we get a U.S. Treasury crisis, I mean, we're going to get those crises eventually, so it could happen next year. And if it does, then those upside projections are going to be much higher. But I do think that as the world really gets to think about what happened here with the Federal Reserve and their new policy, you're going to see big buying in Asia in both gold and silver and platinum. By the way, the whole precious metals complex is going higher.